Let's turn now to the latest business news and Donald Trump's State of the Union speech. Also, of course, addressing financial matters in the United States. To tell us more about that, we're joined in studio by our business editor, Stephen Carroll. So, Stephen, what did Trump have to say then when it comes to the economy there?
Well, President Trump described the US economy as experiencing an unprecedented boom. Now, while it's true the American economy is growing strongly and that hiring has picked up, it's not exactly unprecedented, according to most commentators. Unemployment is close to a 50-year low, but actually rose to 4% in January, while many economists have pointed to a slowdown in growth towards the end of last year and warned of the damage and escalation of the US-China trade dispute that could be done. President Trump had plenty to say on the subject of trade, as Cole Stangler now reports.
One of the rare lines in the State of the Union to draw applause from both parties. President Donald Trump defended his tough-handed approach to trade with China.
We are now making it clear to China that after years of targeting our industries and stealing our intellectual property, the theft of American jobs and wealth has come to an end.
Senior U.S. officials are slated for another round of talks in China next week, aimed at cooling a costly trade war, threatening to raise tariffs on goods from 10 to 25% if the two sides can't strike a deal by March 1st. At the heart of the dispute, forced technology transfers from foreign to Chinese firms, Chinese subsidies for state-owned companies, and the trade deficit. Despite the tough rhetoric, the U.S. deficit with China has actually grown, up $35 billion from last year. Trump also called on Congress to pass a bill giving the White House more authority to enact tariffs on its own, and defended his administration's renegotiated trade deal with Canada and Mexico.
Our new U.S.-Mexico-Canada agreement, the USMCA, will replace NAFTA and deliver for American workers like they haven't had delivered to for a long time.
The new pact would require 40% of cars to be made by workers paid at least $16 an hour, but it would also leave much of the existing NAFTA deal intact. It also still needs congressional approval, no sure thing, now that Democrats control the House of Representatives.
Let's take a look at what's happening on the markets for you next. European shares opening in the red, healthcare and banks among the main fallers. You can see London's FTSE 100, the Paris CAC 40 and the Frankfurt DAX all trading down there. We're watching shares in ADP, that's the company that runs the Paris airports, among others today. It is down 1.5% after the French Senate rejected a plan to privatise the group. Over in Asia, another quiet day. Shanghai, Hong Kong and Seoul all closed for the Chinese New Year holiday. Some small gains, though, on the Nikkei in Tokyo, on the Sensex in Mumbai and on the ASX 200 in Sydney. On the currency markets, the dollar trading stronger against the euro a little bit earlier, just for one euro trading for just under $1.14 and 88 pence sterling as well. Now, the European Commission will block the merger of the trainbuilders Siemens and Alstom. That's despite French and German governments both supporting the deal. The tie-up was announced last year and hailed as the creation of a much-needed European player to compete with its Chinese rival. The French finance minister has called the decision to be announced later a mistake. Bruno Le Maire speaking on French television a little bit earlier.
I think the chips are down, and I deeply regret it, because I think, economically speaking, it's a mistake, first of all. And I also think it's a political mistake, because the role of the European Commission and European institutions is to defend the economic and industrial interests of the European Union. And the decision the European Union is preparing to make will serve China's economic and industrial interests.
The French bank BNP Paribas is planning to cut another €600 million in costs after posting weak results for the last 3 months of 2018. Those cost cuts on top of savings of almost $3 billion, which were already planned by next year. Revenues at the bank fell by 1.5% in 2018, mostly hit by a fall in earnings at its investment bank. BNP's shares opening down 3% in Paris. Well, finally from me, Apple and Microsoft are locked in a battle to secure the title of the world's most valuable company. On Tuesday, Apple took the crown within minutes of the market's opening, but by lunchtime on Wall Street, Microsoft was back on top, and the two companies traded back and forth as their share prices fluctuated throughout the day. Microsoft finishing the day ahead, just by a hair's breadth though. Both companies valued around $820 billion. And it's another reminder of how the technology firms have been hit by the stock market turmoil. In August, Apple became the first ever company to reach $1 trillion valuation, but it lost that title back in November. The race goes on, Eve.
Indeed, with figures that I fail to even imagine at times. Stephen Carroll, thanks a lot with that business update.